We all see the players who dominate the trading space. Institutional hedge funds, high-frequency traders, quant traders, right? Those are very selective and minority groups that actually make the majority of the money that flows in and out of the market on a consistent basis. And as I just mentioned, that is a very small percentage of traders. The reality is a bit different. The vast majority of traders actually struggle, and we're all just fighting for small bits and pieces. The good news is that small bits and pieces are actually more than enough to make yourself comfortable with trading. And what you need to know is that trading is actually a game, and right now you're losing. But that is because nobody has taught you how to win. And I think it's time you know the truth. What you're gonna witness now is better than 99% of the material out there, so pay close attention. I'm gonna be giving you all the tools that you need to create your own and unique process that you can replicate so you can have a good chance of actually making it trading the markets. Expect the best, but be prepared for the worst. The very first thing that I want to do is give you the actual reality of trading, because everyone expects to be this guy on the left hand side here, where he's successful, he's making money, businesses are working, and everything's good. But the vast majority of traders are actually on the completely other side, which is here. If that, right? They're actually just struggling to make trading work, which is totally understandable because unfortunately, well, the current state of social media doesn't help with your trading. As much as there's information out there, a lot of it is actually deceiving and won't let you see the reality of it, right? So I want to make sure that your expectation is correct, because a lot of the people get into trading expecting it's going to be easy, it's going to be quick, and there's no chance that you're not going to be rich by the end of the year, which is actually completely unrealistic, and in 99% of the cases won't happen. So setting up your expectation will be a tremendous benefit to your overall trading career, because if you don't, then there's a high chance you might fall into what I like to call the trader depression cycle, right? There's the circular logic, as I said, that I like to call the trader depression, and unfortunately the vast majority of traders find themselves in this logic. Trading is a harsh world, okay? Nobody is going to save you. It is a crude environment, and you need to know, and I know this is harsh to hear, but people lose their lives over losses. I've seen it firsthand, and it's not something that is actually, well, easy to deal with. When you are confronted with multiple and substantial trading losses, your brain will get wired a certain way. And as we said, the circular logic goes like this. You put your everything into trading, or at least you think you do, because you're missing information. You try hard and you don't succeed. That makes you depressed, right? Because you're putting all your time and effort into something and you're not seeing results essentially. So that makes you depressed. You go back to the drawing board and you try again. And this circular logic goes round and round and round until the individual decides to A, leave the industry forever and don't come back to trading, or B, change their habits so they actually have a chance. Because if you've tried the same thing over and over and it's not working, well, then you might need to change a bit of your approach, right? And as I said, trading is very crude and it's not something that should be taken slightly, okay, by any means. So when you're in this cycle, what is actually happening with you? Well, you're losing money. You have infinite doubts about your future, obviously, because you're not getting to where you want to be. And you're essentially slowly but surely digging yourself into a really big hole. And unfortunately, for some people, sometimes it's already too late to do anything about it. And, well, the consequences are really, really big. Not only that, but actually social media is not helping you in any way, shape, or form, as we mentioned before. And it is important to understand what information is valuable and what information is not usable, because there is a lot of both, and unfortunately there's a lot more of irrelevant information that you need to really pay close attention to. So let's dive into this rather quickly. Take a look at this. Do you think any of these thumbnails actually represent traders? Like, take a look at this one in the middle. Let's investigate the title a little bit further. Let's do some analysis. How to make $50,000 in 7 days trading Forex. Do you think, and please be honest here, that watching a 17-minute video is going to make you make $50,000 in 7 trading days? Not to mention how it is presented, right? There is no way someone can tell me that this is actual trading information and education, because it's not. What this actually is nothing but entertainment, and you need to be aware of it, because a lot of this is available in YouTube's homepage, and if you fall for it, you're not only wasting your time, but you're creating yourself false expectations that you're not gonna meet, right? Take a look at the example over here on the left hand side. How I made $100,000 trading in 1 month, so you can just copy me. Yeah, sure. If trading was this easy, do you think anyone would be doing anything else? You just copy a 13-minute video and that's trading, and now you're going to be making huge amounts of money? Fortunately, guys, it is not that easy. But if you do follow the process that I'm going to be giving you, I will not guarantee that you win, but you're going to have a better chance of actually winning than if you were to be stuck watching these types of things, right? And this one on the right hand side is more the same thing. How I made $10,000 trading Forex in 1 day, so you can just copy me. All of this is absolute nonsense and nothing that's going to help you with your trading in any way, shape, or form. So the why me paradox, right? Because all of this content and that you see on social media, Twitter, YouTube, whatever it may be, creates what I like to call the why me paradox, because you're constantly comparing yourself to everyone else, and you're asking yourself, well, if everyone is succeeding, which, by the way, spoiler, most of the people are not, then why am I not succeeding, right? Am I just not smart enough? Do I not have the right information? Well, the answer is, as I just said, that the vast majority are actually losing traders as well, but they're just portraying themselves as shown here, which is not going to help you with your trading. And once again, this creates a lot of frustration and a lot of desperation to make it, because you think everyone else is winning and you're the only one losing, when in reality is that the vast majority of people are just losing. So you need to keep that in mind. Now you know what your expectations should not be, okay? This is not something you should expect. But what about what you actually should expect? Well, this is something that I'm going to take my time with, because it's actually very crucial to your understanding. When you come into trading, you need to be very well aware that it is the hardest task you will ever do. And it's not even close to anything you've done in the past. Like, take a second now and think about something that was very challenging in your past. Now that you've done that, multiply that by 1,000, and that's how much trading is going to be for you in terms of being hard and tough. So keep that in mind. If you're going to get into this business, well, it wouldn't hurt to get in with the right expectations. Average doesn't make money in the markets, and I've known many traders throughout my career. I've been trading for almost a decade, and the few people that I know that are consistently profitable are not average in any way, shape, or form. They're not average in the work ethic, they're not average in their analyzing skills, and I'm not talking about markets here. You're going to see that in a second, because there is a lot more that you need to analyze besides looking at some charts. So keep in mind that average, which is over here, well, if you're below average, then that's even worse, but average in general doesn't make money. All the people here are losing traders. The winning traders are actually here. And as we said, this is a small percentage of the total players of the game, okay? The rest is stuck losing money. Some of them will lose more, some of them will have somewhat better risk management, but overall, they're all losing, okay? there is a high chance you're not going to make it, and this needs to be heard. Nobody wants to talk about this, so that's why I'm here. Read it again. There is a high chance you're not going to make it. It's going to take you years to get where you want to be, if you're going to get there, which is never a guarantee. Have confidence that you can make it, right? One thing does not equate with the other, okay? Just because there's a high chance that you're not going to make it, it doesn't mean that you need to go into the business thinking that you're not going to make it. What you should do instead is actually be confident. And going back to the traders examples, the few people that I know that actually win, they were the people that said, I'm gonna make it in this game, even when they were losing. That is the attribute, or trait should I say, that you need to have. Okay, if you're constantly doubting yourself, if you're constantly feeling, well, not too confident about what you're doing, then it's not gonna play in your favor. And you need to keep that in mind, because the more confident you are, and while confidence does not guarantee success, the better for your trading. Okay, there's not two ways about it. You can spend your entire trading career doubting yourself, and it's not going to be beneficial for you. So this is what I like to call having a process. And as you can see, in order to have your own and unique process, you're going to need several tools that I've listed over here that are actually very important. And I don't see anyone else break these down in as much detail as I'm about to do. But it is absolutely crucial for your success. The way you win at trading is by having different tools that create a process that is unique to you and that you can replicate day in and day out. Does that mean that my process is going to work every day? No, your process will fail. But it does mean that you have a process that you can analyze and improve on. The problem with traders who never advance or never progress is they're stuck here. They're stuck still dealing with the tools, changing their strategy, changing the risk appetite, not really journaling, not putting in the time, and you're essentially, your learning curve is flat. You're not really improving. On the other side, the traders that know and understand the tools and have their unique process, their learning curve will more than likely look something like this. You may have periods where nothing is working, but if you look, and we as traders know this, from left to right, the overall curve is going up, which is exactly what you need to make it. And I know it may sound simple, but it's not. Finding your process is what makes trading hard. I remember this quote very, very precisely, and it said something like this: trading is the hardest way to make easy money. Let that sink in, because yes, the art of trading itself is simple. We look at a chart and decide whether we want to buy and sell, but doing it consistently is what makes it hard. So keep that idea in mind as we progress through the expectation. Now, what are those tools that I've just spoken about that you need to consider? The number one that I want to talk about, and it is often the most overlooked, is your actual trading tools, which mean what broker am I using? Where am I getting my newsfeed from? What platforms am I going to use? Do I need trade copy? Do I need indicators? Stuff, general technical stuff like that, right? After that, we're going to be diving deep into other areas, but for now, just understand that you should be fighting hard to get the best trading conditions possible at your broker. If you're the type of guy that's just content with average, then your trading is going to be a lot harder. So keep that in mind, and that is in terms of tools. Now, obviously, besides that, you also need a strategy that you can implement. Well, for that, we have time frames, we have models. Some people trade patterns. We trade different markets. We define our patterns in different ways. But in essential, just to summarize a bit of everything, you're going to need trader tools. You're going to need a strategy. You're going to need to know about risk management. You're going to need to know about how to journal effectively, and you're going to need to give it time, okay? And we're going to be diving into these specifics so that you can build your own process, because all of these things combined equal process. And your process is going to be unique because depending on what you choose here and what you choose here and here and here, it's going to be unique and non-replicable by anyone else. So those ideas are extremely, extremely relevant. Give me 6 hours to chop down a tree and I will spend the first 4 sharpening the axe. This refers to our tools, right? Questions you might be asking yourself to determine whether the tools you're using are actually working in your favor or potentially against you. Am I trading with a proper broker? I hear stories every day of people trying to scalp gold with a 4 pip spread and $10 commission per lot. Like, seriously? Are you trying to tell me you want to be profitable, but you're essentially content with trading gold, right? Gold with a 4 pip spread and $10 commission per lot, right? These days, and fortunately for us, the broker space is competitive enough where if you're not happy with your current trading conditions, you can just email their customer support and tell them that, hey, either you give me better conditions or I'm moving to another broker. More often than not, and surprise how many people still don't think about this, they will be able to propose you with a new proposal, which is important because having proper spreads, commissions, instruments, platforms does influence heavily on your edge. If you're trading with a bad broker and you're constantly getting slipped, then maybe you want to consider changing broker. I'm not going to tell you which one you choose. You have more than enough free resources, but please do me a favor and look for any unbiased trading resources where you can get some broker information that you can use. Okay, where am I getting my news feed from? Some people still don't know that there's news scheduled every day and that impacts the market. It's still surprising to this day. You need to get yourself a reputable news source, okay, whether that is Forex Factory, my FX book. There's literally options out there that are going to do their job very, very effectively. So consider it. Do I know how my platform works? Am I comfortable with how I place trades, how I have to exit them, how I'm going to be managing my risk, how can I calculate my risk, where is my stop loss on the charts, everything that is to do with your platform. You need to make sure that it works effectively. Is my trading account optimal for my trading style? If you're somebody who's swing trading, then you might benefit more from having bigger spreads, right? But more commissions, but lower spreads, because you might want to hold trades overnight, and you know that during the rollover, well, spreads widen, so you need to make sure that you're getting the best for your trading style. On the other hand, if you're someone who's scalping, then you might want to prioritize having maybe different spreads that are going to be more effective to making your trading a little bit easier, because trading is already hard enough as it is, and you don't need to make it harder on yourself. Traders don't think about these things nearly enough, and that is one of the few reasons that they're not making any progress, right? Having the best possible trading conditions in itself is part of your edge, and I'm not going to dwell on this for too long. I already told you exactly what you need to know, but just remember that fighting for the best trading conditions is going to help your overall bottom line. Strategy without tactics is the slowest route to victory. Tactics without strategy is the noise before defeat. This is a very relevant quote that actually applies very well to trading, and what I'm gonna do is what nobody else does on YouTube, which is show you my entire trading plan. Now, mind you, my trading plan looks somewhat different to this version over here because I'm constantly looking to improve what I'm doing. But instead of reading everything out loud, because I don't think you're gonna benefit too much from it, what I want you to see is how much detail do I take with everything that is part of my process, which obviously strategy is. This is just my strategy. We're not talking about tools, we're not talking about journaling, we're just talking about pure my strategy, what I look for in the markets to execute a trade. And once again, the purpose of this is not to read it out loud, but rather to have you understand how I break down my sections and how I go and answer questions for myself that are going to help my process of trading. So first of all, the first thing that I do have is knowing when I need to trade. You need to know when you're going to be sitting in front of your desk. Okay, not only because you're gonna start to notice some patterns the more you do it during your time frame period, but because you're going to have some structure in your overall trading day, right? If you know you need to work in the mornings, and when you come home afternoon, then there's going to be kids and they're going to make a lot of noise, and you need to be with them because you want to be a good provider, then you know that that time is not available for you, and you might need to wake up earlier, or you might need to do swing trading during the night. I don't care what it is. Everyone's situation is unique, and no situation is better than the other. In my opinion, it is all about being flexible and adaptability. Now, once you've determined the time to trade, you want to know exactly how you are going to be preparing your charts. Am I trading on the 1 hour? Am I trading on the daily, the 15-minute? If I'm trading using 3 different time frames, then what is the purpose of each time frame? Am I going to be using any specific indicators, tools such as Fibonacci, indicators as the ATR, right? Whatever it is to you that you think you need to use for your strategy, then you want to note that down as precisely as you can. Risk management and position. Once again, extremely important. This in itself, this very simple lines over here in itself will make you better than 90% of traders, because 90% of traders are completely unable to understand their risk, what they're comfortable with, how much should I risk on this position? Oh, it's in drawdown, let me add one more position. No. Be very clear with what you want to do. Be very clear with how much you need to risk, and be very, very clear with your limits. Important. Not many people have a line like this on their strategy plan. If I drop a total of 6R in any week, I will stop trading for the rest of the week and spend that time going over my trades carefully, right? If I lose 6 trades in a row, but that's just me, as I said, then there's probably something wrong with my trading, and I'm not going to keep pushing the button expecting all of a sudden that it's going to turn the other way around. No, I want to investigate what's going on. Is it the market conditions? Is it me not executing my strategy correctly? Is it me having poor sleep? Right? There's a lot of factors that can influence your performance, and you need to have thresholds that are going to help you with understanding that, hey, maybe this is not optimal for me to trade. Maybe I need to step back and sort of reevaluate a little bit of what I'm doing. Setups and entry types. I mean, this is all just so basic that it hurts to speak about it again. But I thought that giving you the example of how precise I am with everything, that would be helpful. So here I am. I know exactly what I need to see. Like, there's no room for subjectivity. Either it's there or it's not. It's there, it's not. It's there, it's not. You get the point, right? Location is relevant. Is there a high time frame bias? If not, then I have a plan B, right? I'm prepared for multiple scenarios so that I can carry on trading the way that I want to carry on. But that is impossible to do if you've not pre-planned for it. And the way to pre-plan for it is, once again, to have your process. And this is part of having a process, which is your strategy and how you're going to be trading everything. Once again, I'm not going to dwell on this too much longer, but you can see I'm very specific at what I want to see. I know what my confluences are, because a lot of traders will say, oh yeah, look, there's this area here that I want to buy, and look, there's confluence. One day their confluence might be that, you know, that there's a high here. The next day the confluence is that there is a, I don't know what people use, like a Fibonacci level here, and it's lining up perfectly. And the other day it's because they had a good sleep last night and they're feeling confident, right? You need to clearly determine what your confluences are and their objective. Like, there's no room there for subjectivity. One day it's because the 1 hour is looking good, the next day the 4 hour is looking good, but the daily not so much, so I'm gonna skip on this, blah 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 blah. A lot of nonsense that's not helping you stay consistent. And the way to avoid it is by simply understanding that your confluences need to be clearly defined, right? Placing orders. When and why do I place my orders? Are there certain times where I need to cancel orders? Where does my stop loss go? Am I following a certain principle? Am I using a certain pip size? What am I doing, right? Is it consistent? Questions that you need to answer for yourself. And if you want to read everything out, which I think is extremely beneficial, although it may not apply to you, then you might want to stop the video now and read it out for yourself, because it's going to be, as I said, extremely beneficial. In any case, you can always go back to this section so that you can take a better look of the things that we're talking about. I'm prepared for things you don't even think about. That is a difference that makes my edge work and yours doesn't, right? There are certain scenarios where the market is so unique that you've never been confronted with that scenario in particular. Do you have a plan for that? Well, you might not, because you've never been confronted with that. In that case, what you need to do is step back and examine, so that the next time that it happens, you know how to deal with it. Whether dealing with it means I'm stepping away and I'm not doing anything, or it means I need to do exactly X, Y, and Z. But be prepared for scenarios that most people don't even think of. That's part of your edge. Trade management. How am I moving my stop losses? Do I add to my trades? If so, how and when? And everything else that is required to make trading decisions. My daily routine, even my day structure, from when I'm looking at the charts, when I'm doing something else. Am I going to the gym? Am I getting some physical activity and all the rest of it? And essentially, this is what I call being ready for war. With that said, let's move on to the hamster wheel, because this is where I find, unfortunately, the vast majority of traders find themselves in, which is not really progressing, not really moving any steps further that are going to help them, get some confidence in their trading and actually getting closer to their goals. Okay, and I have a quote here that a very wise man once said: insanity is doing the same thing over and over again and expecting different results, right? How many of you, and you can let me know in the comments, can relate a bit to this, at least at least a bit, because I'm sure that's going to be a huge portion of you that are just stuck doing the same thing. As an example, a very common issue is for traders to say, okay, I'm trading without a stop loss and it's going great, and you can go ahead and trade 3 months and your equity curve looks like this, right? You're consistently making profits, you have small pullbacks, but overall it's going great. And one day this happens, you lose absolutely everything. I'm sure this has happened to many of you, and it has certainly happened to me in the past. What the problem with experiencing this is not learning from it. That's the only problem, because if it's your first time that you're experiencing it and you can see positive results, then yes, sure, carry on. But the time you see that, the consequence of trading the way that I'm trading usually leads up to this, then don't do it again, please. But for some traders, the problem is they'll say, okay, I just lost all my money going 30 lots long gold, then I'm going to do it again next time, and hopefully that's going to work. And unfortunately, what happens is the exact same thing happens, right? They're not learning from their mistakes. And essentially what you're doing at that point is banging your head against a brick wall and expecting it's not going to hurt, which is, I'm not going to say what it is. How about you think about that for a second? Because it's extremely important, and there is a lot of difference that a trap trader in the hamster wheel and a progressive trader have. So it's a lot different. Once again, let's just go through some of the traits. This behavior on the left hand side leads to this, and this behavior on the right hand side leads to this, which is very, very important. So a trap trader that is now progressing thinks he will one day find the Holy Grail. Still surprise, 2024, people still think that, I still haven't found the strategy that's gonna make me millions. Actually, sorry to break it down to you, that's not how it works. The progressive trader, the one who's progressing, understands that it doesn't exist and knows that hard work is required to have a chance. Once again, we're talking about a chance, not a guarantee of success, right? This type of behavior leads to this. The trap trader, and let me get white as an example over here, is focused on the short-term result. A week can make or break his trading, right? We've all seen this numerous times. You trade well for a week, you think you've cracked the code, you get a little bit too confident. What do? You give everything back and more the next week because maybe the market conditions aren't just there, or you've just lost some trades because, well, it happens to every one of us. So that is a problem and it should be addressed. On the other hand, the progressive trader focuses on the long term and understands the anatomy of the game. This is a marathon, not a sprint, okay? I don't care how well you've traded the last 3 weeks, okay? Come back to me in 2 years and tell me how it's going. It's extremely important that you learn to differentiate short-term results to long-term results. Because in the short term, things can be bad just for it to be in the long term extremely good. And the other way around applies, right? As I said, you've been trading well for a month. Great. I'm happy for you. But come back to me in 2 years, at least. Right? This is a long-term business. And if you want to survive different market conditions, then you need to make sure that you are understanding how the game and the anatomy of the game works. The trap trader looks for excuses and blames anyone but himself. Bad mentors, right? Maybe you pay for a course and what is being delivered to you is not what you expected. Then, well, take the L, accept you made a mistake, and the next time before paying a product, make sure that you're comfortable with what you're paying for and that you're guaranteeing yourself that what you're going to be paying for is actually going to be useful to you. Market manipulation. Oh, the market. Oh, they're always looking for my stop loss. My fucking one lot stop loss is being targeted. Doesn't make any sense to me anyways. Oh, I'm trading on my laptop. Only if I had 5 screens and whatever it may be, and a trading station that is so unique and so good, then I would be profitable. No. Okay, trading requires a screen, a keyboard, and a mouse. Everything else is fancy dandy. Now, I'm not saying that having multiple screens doesn't help. I myself like to use 2, but it's not the reason why you're not making progress by any means. So the progressive trading instead blames nobody but himself. He's conscious that his current situation is a direct result of all the decisions he has made to this point. The losing trader changes strategy every time he encounters difficulty with it. The progressive trader takes his time to analyze a strategy before deciding if it's a worthwhile idea to pursue, right? Before you blindly believe what anyone posts, and myself included, you're free to do your due diligence on what I do and what I teach. Make sure that you're analyzing what is being taught. Does it even make sense for what I'm watching here to work? Right? Most people don't have those critical thinking skills that are, in my opinion, extremely important to sort of make trading work. So you need to be mindful of that. The unexamined life is not worth living for a human being. And this is one of my favorite topics that is so often overlooked that I'm going to speak about it in quite a bit of depth, because I think out of everything we've been talking about, this is by far the most important piece. Journaling. The answer is simple. You must journal anything and everything that will help you make better trading decisions in the long run, okay? Because oftentimes people come to me and tell me, hey, do I need to journal this? Do I need to journal that? Well, the answer is here. You need to journal anything and everything that you think, and you may not be right at the time, but still it wouldn't hurt. You think that's going to make you help better trading decisions. The key here, right, and this is important, is to understand that you start off with a basic potential edge, which is, let's say, level 0, and as you journal and collect data on it, your edge is going to be improved to maybe 4 out of 10, which would be the maximum capacity of your edge. But if you're not journaling, then you're constantly stuck with a level 0 edge, and a level 0 edge is not useful. So keep that in your mind, okay? If you're not journaling, someone else is. And in this market, when you lose money, someone else is making it. So if you want to be on the good side of the coin, so to speak, then you need to make sure that you're putting the odds in your favor by actually journaling your trades. Well, what are things that are good to think about that you need to journal? Well, as I said, it depends on your process. If you're trading, just an example at the top of my head, if you're purely trading gold and you're trading, let's see over here, if you're purely trading gold and you're trading, let's say, from the New York Open till the London close, then you might want to journal everything about the candles that happen in between when I start trading number one and when I'm done trading number two, right? But that may not apply for someone else who is swing trading and he's holding his position for 2 weeks, right? There's no point in analyzing every candle. He might want to look at different metrics. He might want to look at what they are, the trades being executed on, and how's that correlating to your P&L. He might also want to look for confluences. What are different win rates that different setups that I trade have? Maybe if I find myself that, as an example, trading the, let's say, 3 times EMA, and this is just me making things up, I have a let's not talk about win rates because it's not precise. Let's say a 2.5 expectancy, which is the combined ratio of your win rate and risk reward, and you find that trading the 5 EMA instead has just a 1.25 expectancy. Well, both of these ideas are profitable because they're all above 1, but this one is clearly better. So the next time this appears, then I'm going to be risking quite more. Because, well, data is telling you that this has a better expectancy, hence you're gonna make money more consistently. And if you had uncertainty that A, which is the 3 EMA, is better than B, 5 EMA, then why not risk more on A whenever it happens? It's just optimal trading. Time of day versus expectancy, you've talked about this before. Market executions versus limit orders, stuff like, when I pull the trigger, pressing the buy or sell button, how does that relate or compare to when I'm placing limit orders in the market? Is my expectancy higher when I'm trading limit orders? Is it the same? Are maybe market executions better, right? I don't know this. I cannot answer this for yourself, but you need to make sure that you're at least considering it so you have a finite chance of fine-tuning your edge, hence having a higher chance of succeeding in the markets. Journaling is not negotiable. It is part of finding your edge. And once again, this is what I track, which is specific to my trading, which once again may not apply to you because you may trade differently to me. But what you can do is see if there's anything here that you can read that is helpful to you. Maybe you want to start tracking your stop loss placement as well. Maybe you realize every time you place your stop loss below a swing low, it is not working. But instead, if you're placing your stop loss below a, 5-minute candle that closes above a level, then your trades tend to go a bit better. Right? So keep in mind that journaling specific to you, it's part of your edge, and you need to make sure that you're doing it effectively. Now, you're going to make mistakes as you start journaling if you're never journaled before. What you're going to do is you're going to track irrelevant data that you find out you don't need. You're going to pay little attention to actually relevant stuff and you're not tracking that, but that's part of the process. You're gonna get better at journaling the more you do it, right? Your journaling skills need to be improved. They start once again at level 0, but as you do it more and more, it's gonna rise. Maybe it gets to level 5 after a month. Maybe it gets up to level 15 after a year, right? I don't know this. I don't know how your progression is gonna be, but all I know is if you journal, then it's gonna be better for you in the long run. So keep that in mind. And there's a good quote here. This is Jim Simmons, one of the best traders alive. what gets measured gets managed, right? Because and it's completely true. You cannot manage something that is not measurable, and in order to measure something, it needs to be managed. So you cannot have one without the other. And in trading, the way you measure things is by collecting data, and the way you make better trading decisions is by managing that data. So you need to make sure that that is something that you're doing. These were my stats for the last quarter, and these are my stats filtered with the day of the week. DOTW stands for day of the week. And as you can see, once again, last quarter, spoken about this numerous times, haven't really been trading too much on this account, but I can see that Mondays suck for me. Same for Thursdays. Maybe I can, well, make a conclusion of that and help my edge. Now, I'm not saying that 3 losing trades on a Monday is a meaningful result, but the more data you collect, maybe if you have 100 trades and you see that Mondays I'm having a, I don't know, let's do this a little bit more dramatically. I'm having a 27% win rate and I'm losing at almost every trade, then maybe you should not trade on Mondays and instead focus on Tuesdays, because, well, Tuesdays tell you that you have a better win rate and the market seems to be aligning with whatever your edge is a little bit better. So yeah, that is another thing that I wanted to dwell on, because it's extremely important that you are aware of the factors that influence your trading, and the more data you have on them, the easier it will be for you to do that. So what can you read from this? Once again, the sample size is not relevant. Ignore that for now, because we're not focusing on my stats. I want to get the idea across, right? But a very basic read, if the sample size was relevant, could be maybe Mondays are bad for my strategy, maybe Wednesdays are great and I should risk more, Thursdays are my most active trading day, Tuesdays and Fridays seems to be days where not much tends to happen, maybe I can take one of these off, maybe I can do something else during that period. I don't know what works for you. All I can tell you is that the more you journal and the better you get at it, the easier trading will become. Because think about it, the more data you have equals the easier trading decisions get, right? It's not the same to know if you should take a partial just because it has reached, let's say, let's print this example here, let's take our time with this. Let's say you get short over here and you plan on partialing here, right? The market goes lower and now it starts, well, stopping here, seems to be consolidating, now it's starting to move up, and now you're there in your chair and you're thinking, what should I do now? Should I get out? Should I trust my analysis? Should I intervene? Should I remove some size? Should I move my stop loss? There's literally so much you can do. Well, in this scenario here that I've shown you, if you have data, then that's going to help you make a better trading decisions. You can come back to your data and say, hey, wait a minute. Every time I try managing my trades myself, I always end up making bad decisions. Actually, if I don't do anything, I'm 2 times more profitable. Well, if you can read that from your data, then you now know, right, and you become a happy human, that you don't need to do anything. Just let it play out. Your data is telling you that this is going to happen more often than not. Instead of maybe you get out here, you say, oh, no. I don't want to lose this trade. I was already so much in profit. I don't want to let it come back to break even, stop me out. And what you do is you close out here, and the next thing you see, the trade is at target and you're no longer there. So having that data is gonna help you with that. By failing to prepare, you're preparing to fail. And once again, this is so crucial. This in itself, this little tool that I'm going to give you now, in itself, is going to put you ahead of the vast majority of traders. Guys, think about that. What you're going to hear and see now, if you have the patience to go through it, you are going to be better off than the vast majority of your competition. And remember, in trading, when you lose money, someone else is making it. So the better you are than your competition, and trust me, these markets are very, very competitive, then the better for you to have a finite chance of making some money. So when we're talking about risk management, people just say, oh, just risk 1%, you'll be good, right? And while that is not bad advice, it is very generic and not specific whatsoever. So I want to go the other route. I want to show you the specific ways that you can manage risk that are going to make it consistent. So once again, remember the concept we spoke about at the beginning, process, so that your process is consistent and your results can follow. So risk per trade, very important question. How much do I want to risk per trade and why? And once again, we're going to be getting into more depth later. Risk per setup, historical data, maybe you do some backtesting on your strategy and you see, okay, I've backtested my strategy, I have about 1,000 trades, and the biggest drawdown if it ever had was 12 losing trades in a row. So what I'm going to do is I'm going to adjust my risk to fit that 12 losing period in a month. So I make sure that if it does happen, because historically it has been shown to me that it can happen, that I make that I'm still in the game and able to continue, right? On the other hand, if you find yourself that historically speaking you only lose a maximum of 3 trades in a row, then maybe I can risk a bit more. Why? Because historically speaking, you have a lower chance of hitting a losing streak. Okay? So keep that in mind. Drawdown limits, once again, everything is going to be covered. But I want to start off with examples because I think it's important I set the example, and that is exactly what I'm going to do. Now, mind you, this is still my trading plan from the previous version. This trading plan that I'm trading today includes another line, which I think it's quite important, which basically says, let me get a color here, which basically says there's one more line written here that says, if I drop a total of 10R in a month, I will stop trading for the rest of the month and spend that time going over my trades carefully. Same thing, but instead of it being a weekly threshold, it is now a monthly threshold, okay? But that's a little bit besides the point. So what do we see? Risk per trade. For me, myself, I risk a total of 1% per trade idea. And once again, 1%, and let me get it red here, 1% being the maximum. I adjust going all the way down from 0.5% to 1% depending on the type of setup that I'm trading, because I've done my work and I know exactly what setups work better and have a better expectancy, and I'm not going to be dumb to not allocate more risk on that. Okay, so keep that in mind. Now, risk per day, I risk a maximum of 2% of my account per day, and that's it. I never go above this. I will not go above it. 2% is my maximum allocated capital for any given trading day. Hitting a risk limit will result in no trading for the rest of the day, right? Very, very self-explanatory. If I ever happen to lose well, not necessarily 2 trades because sometimes I risk less, but if I ever happen to reach minus 2% in a day, let's say I start my day off with 10K or let's say 100K and I end up with 98,000, then that's it for me on the day. I have to wait and make sure that I'm ready for the next day, because survival is important in these markets. And the thresholds that we spoke about earlier, right? If I lose 6R in a week, then that means that something is wrong with my trading, whether it's me or the markets. I want to know that information. So what I'm going to do is I'm going to stop and actually come back to trading the next week when I've had time to analyze what is actually going on with my trading. Key questions you should be able to answer, okay? And this is now very specific to you as a trader. Do I have drawdown limits and why? It's not good to say, my drawdown limit is 4%. No, don't leave it at that. Go a little bit further and beyond. Why is it 4%? Is it because that is where you're comfortable with? Is it because you might be very risk averse and don't want to have the chance of being confronted with a huge financial loss? I don't know what it is, but you should know why you're setting the limit that you're setting. Is there any setup that has a better expectancy? If so, do I want to allocate risk accordingly? That is the previous idea that I spoke about before. Maybe you trade 3 setups in total, and after doing some investigation in your journal, you find that setup C has a better expectancy. Once again, expectancy 3. 1 and above is profitable, 1 and below is unprofitable. You can clearly see that setup B in this case has a 1.1 and setup A has a 2.1. Okay, with that information, then maybe I can see that risking more on setup C when it happens is a good idea. Okay? How much am I prepared to lose in a day? This is about having your daily limits. Once again, for most people, it tends to be around the 2% mark. I've spoken to many traders, and 2% seems to be the general consent that someone is willing to risk in any given trading day. Do I set myself daily targets? Now, I personally don't. But that's me, right? I don't go and say, okay, I've won 3 trades today, I need to stop because I don't want to give it back. No. If my trade is working and the market is rewarding me, why do I want to stop early? But that's just me. Maybe you find that for yourself, you take 3 trades and every time you take a 4th one, it loses, then maybe I want to stop at 3, right? But these are just ideas that I'm hoping I'm introducing into your head so you can make better trading decisions. This is all revolving around, if you really think about this presentation, it is all revolving around making better trading decisions and having your unique process. And all I'm doing is trying my best to give you the framework that you need to follow in order to have your own and unique process. The hardest part of this game, very, very important. Being able to create your process is one thing, but being able to remain consistent with it is another beast. That is something that I don't think you see the relevance of for now, but as you progress in your trading career, hopefully successfully, then you're gonna thank me for this. I've had this example before, and I want to talk about this. Let's say trader A is working at a hedge fund and trader B is also working at the same hedge fund, right? Let's say we're comparing performances, right? After 5 months, the manager comes in and tells trader A, hey, let's review your trading, and tells the same thing for trader B. Now, if I'm the manager, what I want to see is your process, okay? I'm not worried about your trading results in the last 5 months. I'm not concerned at all. Why? Because if I'm teaching you, then I know the process you're following works, then all that is left to do is for you to follow the process, which is very, very hard. So if trader A says to the manager, look, I've made 70%, but on day 4, I didn't trade what I was supposed to trade. On day 7, I broke my plan and started trading crude oil. On day 11th, I risked 10%, but it luckily worked. On day, 19, I was tired and unfortunately I clicked the buy button twice, or I clicked the wrong button. Then I'm not going to be proud of your performance, even if you've made the 70%, because that's not your process. And if you don't have a process, you have no business. On the other hand, trader B comes to me and says, look, I've lost 10% in these last 5 months, but here are my trades, here's what I'm doing. You can see for yourself that I'm following the process to the T. What I will tell you is, great job, keep going. Why? Because all that it tells me is that the edge or / process that you're currently following doesn't have an edge in the current market conditions. But market conditions do change, and I know that if you carry on trading, and if I told you the edge, then you're eventually going to turn it around and start making money. Whether trader A in this scenario is completely unpredictable. He could be a trading genius that breaks his plan every time it's right to do so and continues making money non-stop, or the most likely scenario, he will eventually blow out and be removed from this firm because he's not following the process. So keep in mind that trading results in the short term does not equate to improvement, okay? You can be doing everything right and improving your trading by a lot, but the results are just not there. And that is because market conditions change. You have periods where market conditions are going to be suitable for what you're doing. Let's say, as an example, you are a mean reversion trader, which means you're always looking to sell when a market is going up and you're always looking to buy when a market is going up. Let's say during a period the market is just going up and down non-stop. Well, then that trader is going to be having a fun time because his strategies are going to be working extremely well. He's able to sell here, he's able to buy here, sell, buy, blah, 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 blah. On the other hand, that same market environment where nothing is really trending and everything is in this large box of consolidation, well, that same period for a trader that is actually trying to catch trends and hold on to trades is gonna be a bad period. But the next thing you know, 4 more months go by and now the market is just trending, pulling back, trending, right? Just simply fitting your plan perfectly. And now the trend trader is doing absolutely great and his trades are working and he's holding on to big winners. But the trader who is looking for mean reversion, which is to say the market changing direction, is not doing well because, well, the market is just moving up in one direction. So keep in mind that market conditions heavily influence what you do. What do we have over here? And you can do some analysis for yourself, right? I actually think this is very important. You need to consider that the market in itself is a huge advertisement machine. Right? It is constantly advertising you different prices. Oh, gold yesterday was, let's say, 1920. Today it's 1940, right? And it's creating these different illusions, we can say, I guess, where you're constantly being enticed to buy this, sell that, buy this, sell that. The market is very efficient and very good at doing so, right? You will find periods where everything looks like a trade and you want to take everything. But the reality is that you need to understand what you're looking for. And the only way to understand what you're looking for in the market is knowing what you are not looking for. That may sound a bit confusing, but this is all, once again, part of having a process. In order to know what you're looking for, you need to have your own and unique process. And the way you get your own and unique process is by following exactly what I've given you. You need to have the most optimal trading tools. You need to have your strategy down very in depth with every little contingency. You need to understand your risk management parameters. You need to understand your journaling process, right? And all the things, it does say journaling over here, and all the things that we spoke about in this presentation. So yeah, keep in mind, please, that the trading financial markets is not for everyone, that people struggle very, very hard, and do not believe everything that you see in social media, okay? The market is a very tough environment. Most people will not succeed, but if you want to have, as I mentioned before, a good chance of actually making it in trading, then you need to make sure that you're stacking the odds in your favor, and more importantly, understanding what process you need to follow, okay? And this is where we get into the time paradox. Time only seems long when it's ahead, not when it's behind, right? Because what you may find is you start trading a strategy, and for the first 2 weeks it's not working well, and you say to yourself, oh my god, do I have to carry on trading this for 3 more months before I see if it has really an edge or not, whatever it may be, right? Well, 3 months it's not that long. If you think about what you were doing 3 months ago in the past, then you might realize that it's not that long ago. So I encourage you to make the effort of committing to a process. And I'm not here to tell you you need to follow what I do, but I do believe that I'm speaking the truth here. You may find that you enjoy scalping, you may find that you enjoy swing trading or even intraday trading. I'm not here to tell you what to do. I'm here to tell you that you need to follow a process, and a process is comprised of all the things that I've covered in this presentation, which I hopefully have done successfully. So thank you very much for making it this far. If you do have made it this far, please, I would love to connect more with you. Let me know what you think of this. Let me know if you want to see more future presentations and on what different topics, because my aim with this channel is to provide valuable information. That's it. I want to make sure that I'm building a community of traders that are actually serious about their craft and understand the harsh reality of the financial markets. So in order to be on the same page, I want you to share my feedback, to share feedback with me. It is very, very important to me. So I'll see you in a future upload, and thanks for watching.